Hey everyone, in my last video on Shift, I showed you why I believe Shift stock is a 10x investment opportunity. After reading their earnings report and listening to the earnings call, my conviction in Shift is even stronger. In this video, you'll learn about Shift's new advertising breakthrough, their 3 growth drivers, and why operating leverage will play a big part in Shift's future. If you'd like to see more videos like this one, go ahead and like this video and subscribe to my channel. It would mean a lot. I really appreciate your support. Shift's market opportunity is massive, as the used car market in the United States is an $840 billion opportunity, and less than 1% of used car sales are done online. Digital adoption in the used car market is almost certainly going to increase dramatically in the coming years, and Shift is positioning themselves to take advantage of this opportunity. In their new marketing strategy, Shift discovered that brand awareness advertising helps them grow their presence in existing markets and lays a strong foundation for new market expansion. But the biggest thing they learned is that a brand awareness campaign is more cost-effective and delivers a longer-term ROI compared to their past digital marketing strategies. In Q4, Shift initiated a major transition of their marketing strategy. They tested several creatives through various channels in multiple California markets, and their best results was from a multi-touch, comprehensive brand awareness strategy in Sacramento. For example, here's what Shift reported in their shareholder letter. We found that our customer acquisition cost in Q4 was about 50% lower compared to the blended average across all markets, and Sacramento's unit growth rate over the quarter outpaced Shift's total. As a result of our successful test sales, we have begun deploying our new strategy, highly concentrated on investing in brand awareness with a national TV campaign that we think will resonate with consumers and build our brand over the long term. While we expect our investments today to pay off in the long term, we've already seen really positive early indicators for where we are heading. Site visits and leads have seen a meaningful uptick since we've launched our new strategy. We are creating non-perishable brand impressions that are going to carry us forward and benefit us throughout 2021 and beyond. There's no question Carvana is the biggest player in the online used car retail category, but Shift has tons of room to grow in this huge market. You just heard about how they plan to scale up with their new brand awareness strategy, and they've also identified 3 key growth drivers. The first is deeper market penetration within their existing markets. Shift is currently in 10 markets. In California, Shift operates in San Francisco, LA, San Diego, and Sacramento. In the Pacific Northwest, they operate in Portland and Seattle, and they just began buying cars and are entering the big Texas market in Dallas, Fort Worth, Austin, and San Antonio. These are the biggest markets for used cars, so there's lots of room for growth within these existing markets. The second growth driver is expanding into new markets. Texas is Shift's newest market, and Shift expects sales to ramp up in Texas towards the end of 2021, and the Texas market will represent a key growth driver for the company. In the future, you can count on Shift to expand and operate in the same markets that Carvana and Vroom are already in. For comparison, Carvana serves over 100 markets today, while Shift will serve 10 markets by the end of 2021. Expanding into new markets will be a big driver of growth for Shift and will help them grow market share in the used car market. Shift's third growth driver is increasing their profitability by improving their finance and insurance offerings. In the fourth quarter, Shift grew other revenue more than 300% as they continued to increase attach rates of supplementary products to their sales. The goal of Shift's F&I offerings is to improve gross profit per unit. Shift reported $791 per unit of F&I, which represents a 65% year-over-year increase. But Shift believes there's lots of room to grow to make much more money from financing and selling insurance products like gap insurance and extended warranties. Shift expects significant improvements in their F&I numbers for 2021 as they begin to focus on increasing margin on the back end of their sales. The most exciting news to me about Q4 earnings is the incredible progress Shift is making in reconditioning cars. In October 2020, Shift was processing 250 cars a week in-house. As of March 2021, Shift is now processing over 500 cars per week. This improvement is because Shift is relying more heavily on reconditioning cars in-house again. By January 2021, Shift returned to pre-COVID utilization levels where only 15% of Shift's vehicles were processed using external reconditioning, as compared to a peak of 45% in August and September. The remaining 15% of external reconditioning consists of inventory in new markets like Texas, where Shift uses third parties for reconditioning on an interim basis until they have their own reconditioning hubs in those new markets. Another improvement Shift reported was an improvement in operational efficiencies. They accelerated the hiring of reconditioning technicians and achieved the headcount targets they needed to be fully in-house in their core markets by January 2021, a few months earlier than they expected. Shift changed processing flows, scheduling, and production time management, which has led to dramatic week-over-week improvements in their reconditioning capacity and has helped them reduce costs. These reconditioning changes will continue to benefit Shift throughout the year and for the long term as they build new reconditioning hubs. By being able to process more cars in-house, Shift is now able to be more aggressive in acquiring more inventory, and that's exactly what they've done. Shift reduced inventory dramatically after the pandemic started, but now they have increased sellable inventory 148% from the beginning of December to the beginning of March. Shift also indicated on the earnings call that they had the capacity to recondition much more than the 500 per week that they are processing now within their existing markets. This is what's exciting to me because Shift will start seeing the benefits of operating leverage play in their favor as they can process more cars without investing in more infrastructure to produce that output. This will help Shift in their path to profitability as they scale up. In the long term, Shift's reconditioning capabilities and operating leverage can help Shift achieve industry-leading operating margins. To recap, Shift is a fast-growing company, and it seems they are doing all of the right things to position themselves for long-term success. I expect Shift to continue to execute by growing their business in existing markets and expanding into new markets. Shift has a clear path to profitability and what I believe will be industry-leading margins with more gross profit from F&I products, operating leverage as they scale up, and building lasting brand awareness. If you enjoyed this video, I'd appreciate if you like this video and subscribe to my channel. In the comments below, let me know if you believe in my story or disagree. As always, bulls and bears are welcome. Thanks for watching.